Hello, good morning, good afternoon, or good evening, depending on the part of the world you're watching this from. This is Bearable King, and I will be doing a quick video on my weekly review for this week. This week being almost the end of March, which is 21st to 27th of May. Sorry, 21st to 27th of May. And what I'll be doing in this video is I'll be running through XAUUSD, which is gold, GBPUSD, which is the pounds dollar, and EURUSD, which is the euro dollar, to see what opportunities may lie in the market this week, if we should stay in the market or we should get out, or we can take advantage of the market, okay? So here in front of me is the gold chart on a weekly time frame. If you haven't watched the full breakdown or the full analysis, please try to do so. The link will be available somewhere in this chart, in this video. All right. Please watch that video before you continue this. So I said earlier that the market on dollar or gold dollar has been ranging as far back as 2020. When we say the market is ranging, means that it is giving equal highs and equal lows. Okay, you can see here the market has been ranging, then the market came up here, bounced here, came down, and from here came down here. Now at this bottom, you can see that we have a fakie here. Then the price pulled up to this point, came down and came up here. Now, if you watch the video, I spoke about expecting the market bouncing around this point and then going higher. Okay, so here we had a resistance here. This place served as a support, or it was broken. Then this place served as a resistance, and now I'm expecting this same point to serve as a support, meaning that I'm expecting that this price will fall around 1900, and then from here we should expect that the market will move up. And my expected endpoint for this entire move would be around 2,420 thereabouts. Okay, so this is the weekly chart, and as we can see, we had a nice rejection here by having a shooting star, and then we have an engulfing bearish candlestick, which shows that the price wants to fall. So on the weekly time frame, I'm looking at the price falling to this area, okay, before moving up or anything, okay? So now we'll go to the daily time frame to see what we're expecting in the market. Now on daily time frame, we had the market push up 1, 2, 3. If you know me, I normally talk about this 3-step strategy. And now the price is falling, which is also in line with what we saw on the weekly time frame. Here we have something that looks like an inside bar or a railroad track, which means that we may have a slight pull up and before the continuation to the lower side. Now I'm going to the 4-hour time frame. On the 4-hour time frame, when we had this pullback here, I informed some of my clients to start selling from 2047, and I'm sure they are glad they did because the market gave a good return of about 800 pips, which is a lot. Now, when this market broke down, we had a rejection here. We had a rejection here. After this rejection, we had another rejection here. Then we had a proper break, okay? Now, one thing I like about last week's move is this was the last low, right? This was the last low before this high. And now the price has broken this low, which tells me that there's a possibility that the market would continue falling. Now, remember that I spoke about this low as a support area. And most of the time when a support is broken, it usually turns out to become a resistance area of interest. So Based on this, for this week, I would be expecting the market to pull up to this area. Now, once it pulls up to this area, I would like to see a nice candlestick confirmation for a continuation to 1900. Okay, now why are we looking at this? First and foremost, we can see that there's a candle breakout of this support area on the 4-hour time frame, and the market has created a new low. And because the market has created a new low, we have a nice pullback here. It is possible that this market is going to pull back to this area of interest, which is around $2,000 per ounce. Once the price pulls up back to this place, we'll be looking for a reversal candlestick confirmation before we sell. Aside from this, for the smart money concept traders, there's something called fair value gap, or FVG. Yeah, fair value gap, which means that most times when you have a candlestick break like this, you can see there is no pullback to this point. So the market usually pulls back into the zone before a continuation. All right. Now, finally, I'm going to apply the Fibonacci from here to here. Fantastic. So what I'm expecting here is I'm expecting the market to pull up to say 2000, and from 2000 I'm expecting the market to drop to 1923, which is roughly about say 700 pips. 700 pips is a good return for anyone. Now, if you're going to take this trade, you need to wait for the candlestick confirmation to break, to reject this area. And once you have that, you could look for a sell around here. Your stop loss will be slightly above the candlestick formation, and your take profit will be about here, which is roughly times 6 of how much you're risking. So if you're risking $100, there's a possibility that you'll be making $600, and that figure goes up. So if you're risking 1,000, there's a possibility that you can make $6,000 on this single trade alone. Now, please, when trading gold, you usually wait for the confirmation before you take the trade. So for this week, what I'm expecting is between Monday and Tuesday, I'm expecting the price to come back here. Then from Wednesday, something we call Wednesday, Magical Wednesday, you could see a reversal from here all the way down to this point. Now, what you can identify is on the weekly, daily, and 4 hours, we are looking at a bearish movement. So this should confirm our entry, and upon confirmation, we can take the trade, expecting that the market will move in our favor. All right. Quickly, I'm going to move to British pounds, American dollar. Now, remember that here, the market has bounced here and then giving us an upward movement somewhere around here. And I said that because the market has given us a nice rejection here, I'm expecting that the price would move all the way to the top here. And for those who know me, I took it a step further by going to the daily time frame. Now, if you haven't watched my video, you should check. You will probably find the link somewhere around here on the British pounds, American dollar, so that you can watch the top to bottom analysis. Now, on the daily time frame, I did this analysis last week, and I told a lot of people that I would really be trading British pounds, American dollar, because I'm expecting a rejection around here for the price to go up. Now, the problem with this is before this market moves up, remember what I said, this is a resistance. We have a breakout here, and now it is serving as a support. This market is going to deceive sellers that is coming back down and deceive buyers that is no longer going back up. So we are going to have a lot of stop hunts around this area before liquidity actually comes in to start moving upwards. That's the reason why I'd advise you for now, be careful when you're going to trade this. What am I looking at in this chart? I'm looking at the possibility of this price moving from this area to this point. Now, it is possible for this market to come here, do this, range a bit to deceive people before doing what? Pushing upwards. Remember that before this market eventually broke out here, we had a lot of range there before moving. And now it's back here. There's a possibility that this range here could repeat itself here. So if I were you, I'd be careful before I start buying so that my stop loss does not get haunted. Quickly on the 4-hour time frame. So we had a test, which was what I told my clients and the people on my free signal page that we have a fair value gap here, which was just tested here, and what happened, the market started coming down. Now, if you look at this setup, this is what we call a falling wedge. So what are we expected to do in this market? In this situation, there is a simple way of trading it. One, we need to wait for a breakout. What does a breakout mean? The price will break out of this range. Secondly, it needs to create a higher high. Once it does that, we would expect the price to pull back to retest it. Then we'll be looking for a buy like this. What do I mean? Now is not the best time to buy because this price may also as well fall down. Okay? So if you ask me, the first thing we need to do is wait for a break out of the falling wedge. Just follow the steps and you'll be fine. Secondly, wait for a higher high to be created. And wait for the retest of the broken falling wedge. All right. Once you have these three, you look for a bullish confirmation or bullish confirmation to buy. It's as simple as that. So first and foremost, we're not going to just enter this trade because we can see a falling wedge. And even though on the weekly, we're expecting the market to fall, what we're going to wait for is we're going to wait for this price to break out and create a new high. You can see it has to create a new high. Once it creates a new high, we're expecting it to come back down to retest this broken falling wedge. And you could see something like head and shoulder setup here before the market will move up. So we will be looking for a buy somewhere around here, meaning that we'll be placing our buy somewhere here, at least somewhere here. This would probably be our first take profit point, this area. Our first take profit point will be somewhere around here. And our stop loss will be somewhere around here. So I'm looking for a setup like this. When I get my confirmation, I'll be looking for a buy somewhere around here. And I'll be risking about 45 pips to about 50 pips to make almost 250 pips. So this is what I'm expecting on GBPUSD for this week. Now, understand something. On the weekly time frame, right? We said we're expecting the market to continue going up because it has created a higher high. So this pullback is just a pullback to gather more momentum to go up. On the daily time frame, it has broken out of this range. And right now, any move here, any pullback here is an opportunity for you to buy. On the 4-hour time frame, we have a falling wedge, and this falling wedge, all you simply need to do is wait for a breakout, wait for the pullback. When you get a bullish candlestick confirmation rejecting this area, look for a buy to at least this high, and the market can actually move further by going to this high, 1.33, but it's not going to move in a straight line. So we're expecting the market to possibly move from here, break this high here. When it breaks it, comes back to retest it, and then move all the way to the top. So this is the overall view. But first, this week, we should be able to see the market move from here to give us an equal high or a higher high. Okay, so this is my expectation for this week on GBPUSD. Now, the Euro US dollar. Please, if you've not watched my top to bottom analysis, please, it will be available for you. Kindly click on the link and watch it before you continue this video. Now, I said earlier in the video that we are expecting the market to range a bit before we continue the upward movement. And on the daily time frame, we had the market range, right? We had the market come up to this point, bounce, equal low, equal high. At this point, it ranged, and then the market is trickling down. We have a trend line here that has been broken. So what we're expecting that there's a possibility that this price may pull up. Please go and watch the video. I just posted it today. It may pull up to this area, then maybe come back down here, or the price could just continue moving upwards. Okay, so this week, what would I be expecting for this week? We had a bullish movement upwards from here, 1, 2, 3. Then the market has been ranging. Okay, now that the market has been ranging, you can see that EU has been very choppy, which is the reason why a lot of people have been avoiding it. Now we have this range here that has been broken, and if I apply my trend line here, I am closely watching the market. Okay, so it is possible that this price from here may break above like this. We test this point and come here. Then from here, the price may fall down. Alternatively, the price may come from here, retest this point, and keep coming down to either meet some key areas like either this junction or come down to this area of interest. Okay. Alternatively, the price may do what? Just move upwards. Okay. Because of this reason, I would not be looking to trade Euro USD for this week. I would prefer to just observe it. If you have been following my channel on Telegram, Variable FX Free, you would observe that I rarely give signals on EU because it has been very choppy. So right now for EU, I will be watching it to see what will happen this week, and then maybe decide next week, or if I see a good opportunity during the week, I could actually post it on my Telegram channel. So this is what I'll be looking out for this week. On gold, I'm looking at roughly 700 pips drop. And on the British pounds, I'm looking at a possible 500 pips. So for now, this is what I'm expecting this week. That's roughly about 1,200 pips, which is not bad even for anybody. So for now, this is what I'm looking at, and I'll see you guys next week, or you join my Telegram channel where I'll be posting midweek analysis as well. Thank you and bye-bye.